Howdy, y'all. Welcome to Liberty Call. Today is Wednesday, June 21st, 2023. I am Raymond Dahlman, your humble host here. Apologize for missing a couple of days. Friday, I was traveling. We went to the East Coast to go see our granddaughter for her first birthday. She's a little cutie. And then we were there over the holiday weekend and then flew back early yesterday morning. So I was pretty beat yesterday and just didn't feel like doing a video. So hope you don't mind. Let me get my glasses straight. If it's your first time watching Liberty Call, I'm glad you're here. Please ignore my dog over here rolling around like a moron. Please give me some thumbs up, likes, shares, subscribes, follows, and all that good stuff. We are not a fantastic. Well, actually, the market's been down since last week when the Fed pretty much telegraphed that they were going to continue to raise rates, and the market did not like that. They were hoping for lower rates, and I don't think they're going to get their wish anytime soon. So if they do, then that's going to mean bad news for the rest of us, because that means more inflation. I mean, it might mean the stock market goes back up for another 6 months or a year. But, if we get more inflation out of it, I don't think most people are going to be real excited about that. All right, let's go ahead and jump into the numbers. The Dow Jones today was down 0.3% to 102 points, closed at 33,951. S&P 500 down 0.52%, closed at 4365. NASDAQ down 1.21%, closed at 13,502. The VIX was down today, which is a little odd since the SP was down. VIX was down 4.9%, closed at 1320. Canada down 0.24%. Brazil up 0.67%. Italy, Mexico. They look very similar. Mexico down 0.56%. Over to Europe, Germany was down 0.55%, UK down 0.13%, France down 0.46%, Netherlands down 0.52%, Spain down 0.04%, basically flat, Italy up 0.12%, Switzerland down 0.38%, and Portugal down 0.2%. Both Russian exchanges in the green today. The MOEX up 0.56%, RTSI up 1.42%. And the overnights in Asia, mostly red, but we just start out with green in the Nikkei. Was up in Japan, was up 0.56%. Australia down 0.58%. New Zealand down 1/3%. In China, the Shanghai was down 1.31%. Shenzhen Component down 2.18%. China A50 down 1% even. DJ Shanghai down 1.44%. Hang Seng down 1.98%. And the Taiwan weighted was up 0.1%. All right, so that was everything as far as the markets. So like I said, I think it's kind of a temper tantrum right now with the markets. They're not real pleased that, the Federal Reserve is not going to help them out with a bunch of easy credit and lending. But, for the rest of us, I think we'd like to not have everything continue to go up in price. We finally got energy inflation down in negative territory. Hopefully that stays like that for a while so we can get some deflation in across the energy sector for a while. Probably not going to be real good for the energy companies, but at the same time, I think a lot of us would like to save a few dollars here or there. All right, next up, the market recap. Dow ends lower as Powell's hawkish testimony keeps tech on ice. The Dow closed lower on Wednesday as investors remain cautious about the tech sector following Federal Reserve Chairman Jerome Powell's hawkish comments on the need to resume rate hikes later this year. Powell stated that the Fed's projections for 2 rate hikes in 2023 were a pretty good guess, and he put that in quotes, if inflation continues to exceed the 2% target. This contrasts with the more cautious stance of other Fed members, including Chicago Fed President Austin Goolsbee. Don't like that guy. And the Atlantic Federal Reserve President Raphael Bostic, who expressed concerns about the potential negative impact of rapid rate hikes on the economy. Well, Mr. Goolsbee, he was Obama's economic advisor. The guy is smart. He's a professor, I think, at a college in Chicago, maybe Loyola. But, he drinks the Kool-Aid of his partisanship and never going to say anything bad. So, about his team. So maybe they should have thought about that at the Federal Reserve before they printed all that money 3 summers ago, with the consequences of how they were going to fix it later on. So diving back in, as a result of the wavering sentiment on stocks, big tech companies such as Google and Microsoft experienced downward pressure. Google filed a complaint with the Federal Trade Commission accusing Microsoft of anti-competitive practices in the cloud computing market. Amazon also faced legal trouble as the FTC sued the e-commerce giant for allegedly misleading customers into signing up for its Prime services without consent. Ooh, consent's a good thing. That's my biggest bitch with the federal government. They don't have my consent to do most of these things. Additionally, Tesla saw a decline of over 5% after Barclays downgraded the stock, citing concerns about potential price cuts and their impact on the company's margin and earnings. On a positive note, the energy sector rebounded, supported by recovery in oil prices. Baker Hughes, APA, and copper futures were among the top gainers in the sector. However, FedEx Corporation disappointed investors with first quarter, or no, would that be maybe second quarter revenue that fell short of expectations, leading to a nearly 3% decline in the stock. Cryptocurrency-related stocks, including Coinbase, MicroStrategy Inc., and Riot Platforms rallied as Bitcoin briefly surged over 30,000, reaching a more than 1 year high. The optimism was fueled by hopes for a spot Bitcoin exchange traded fund, ETF, with several firms, including WisdomTree, BlackRock, and Invesco, making new filings for a spot Bitcoin ETF, anticipating increased demand from institutional investors. Overall, investors remain cautious in the face of Powell's hawkish remarks and the ongoing uncertainty surrounding inflation and interest rates. The market will closely monitor Powell's second day of testimony before the Senate Banking Committee and the comments from other Fed officials expected later in the week for further insights into the central bank's stance on monetary policy. And the next meeting is July 25th at 6, so about 4 to 5 weeks from now. So I imagine they're probably going to raise the rates again at that meeting. I would be shocked if that did not occur. All right, next up, dollar dips as Powell testimony disappoints the hawks. U.S. dollar weakened against a basket of currencies on Wednesday as Federal Reserve Chair Jerome Powell's comments on the central bank's fight against inflation did not meet the more hawkish expectations of the market. Powell acknowledged that the battle against inflation is still a long way to go and indicated that interest rates would likely need to be raised, albeit at a more moderate pace. Market participants had anticipated a more explicit endorsement of the Fed's latest economic projections, which suggested that borrowing costs could rise by up to a half a percentage point by year end. However, Powell's balanced and data-dependent language left investors speculating that there might only be one rate hike rather than two by the end of the year. Following Powell's testimony to the House Financial Affairs Committee, the dollar index, which measures the currency against six major rivals, fell by 0.43% to 102.07. Investors are now eagerly awaiting the Consumer Price Index and non-farm payroll data for July, which are expected to be significant events. Meanwhile, the euro gained 0.62% against the dollar, reaching 109.85. And the Japanese yen experienced pressure as Bank of Japan Governor Kazuo Ueda reiterated the central bank's dovish stance on maintaining its ultra-loose monetary policy. The British pound fluctuated after UK inflation data showed higher than expected acceleration in May, with the annual pace of consumer price gains remained steady at 8.7%. So inflation is still running pretty rampant over in the Europe. The Australian dollar, which had weakened due to the Reserve Bank of Australia's lack of guidance on further rate hikes, managed to recover and was up 0.15% at 0.67975 against the dollar. Bitcoin also made gains, surpassing 29,000 for the first time since late May, with the support of a new crypto exchange backed by Fidelity, Citadel Securities, and Charles Schwab. Investors generally anticipate a resumption of rate hikes at the Federal Reserve's July meeting, although doubts persist regarding additional increases beyond that. The market remains attentive to upcoming economic indicators and the Fed's future actions in addressing inflation. All right, so I think the dollar's got bigger concerns as far as what the BRIC countries and Saudi Arabia are planning on doing. Personally, I think that's probably a bigger worry than comparing it to the other fiat currencies out there, because if the rumors I've been hearing and from the articles I've read is that they are planning on backing their currency with gold. And if that occurs, that could be a real monkey wrench into the fiat dollar, which the Fed has liked being able to inflate a lot since 1971. All right, last up, article here comes from Mises Wire. It's titled "After the Debt Ceiling Deal, Look for Liquidity Problems in the Markets." It's written by Doug French. All right, individual investors may be feeling optimistic with news of the debt ceiling deal between Joe Biden and Kevin McCarthy, as reflected in a sentiment poll showing bullishness in the investor class. However, this deal will result in massive issuance of U.S. Treasury debt that could overwhelm the markets and have a significant impact on stock investors. According to Sim Carson of Kai Volatility Advisors, approximately $1.4 trillion in debt will need to be issued before the end of the year, which will draw money away from asset markets. The concern over liquidity is echoed by Eurodollar University's Jeff Snyder, who argues that the focus of the size of the Federal Reserve's balance sheet and the assumption that it implies more money creation is misplaced. Schneider points out that money is leaving the banking system and not returning, as evidenced by significant deposit outflows recorded by the FDIC. Banks have become risk averse and are prioritizing safety and liquidity over money creation and intermediation. Excuse me. Snyder warns that the euro-dollar system lacks sufficient bank money, making it fragile and susceptible to disruptions. He draws parallels to the 2008 financial crisis, suggesting that falling commercial real estate prices could infect other areas and lead to a lack of liquidity and increased risk aversion. Snyder argues that the Federal Reserve and central banks are often reactive and fail to anticipate these issues, leaving markets illiquid and banks struggling for funding. Others, such as Lynn Alden, share concerns about liquidity and anticipate potential periods of negative liquidity in the future. Alden highlights the risk of the treasury markets and smaller banks. Snyder and Carson also point to September as a critical period to watch for a liquidity crisis. In this context, it becomes evident that stock prices are influenced by liquidity rather than fundamentals, contrary to the narrative often presented in the media. As the issuance of treasury debt increases, individual investors may face challenges and find themselves crowded out by the impact of government actions. All right. So, I mean, if the government continues to issue more and more debt instead of, some austerity and slashing, I mean, seriously, we could just go back to 2020's, program. Anything that was created after 2020, just get rid of it. Fire all the people. Those people can go back to the public sector or the private sector and do something productive with their time. But we can't continue to just have more and more and more and more government jobs because they are a strain on the rest of us who actually are funding all of this. Anyways. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. You can book a meeting, give me a call, shoot me an email, whatever you like. And I hope you have a wonderful evening. The Astros are still playing right now. Let's see what the score is. They're up 8-10 over the Mets in the middle of the eighth. So we'll see what happens there. So go Astros. And hope everyone has a wonderful evening. And I will talk to you next time. Adios.